Attention, financial trailblazers and investment aficionados. Brace yourselves for an exhilarating journey toward financial wisdom with the legendary The Intelligent Investor by Benjamin Graham. This isn't just a book. It's a roadmap to financial freedom. Whether you're a novice eager to master the art of investing or a seasoned pro looking to refine your strategy, this book is your golden ticket to financial prowess. Dive into the treasure trove of investment brilliance and uncover the magic of value investing, where market fluctuations become opportunities, and the concept of a margin of safety becomes your shield against unexpected twists. Don't miss out on this opportunity to revolutionize your approach to money. Grab your copy, join the League of Intelligent Investors, and let the excitement of financial success begin. Hello everyone, I am Mike, and welcome back to 5 Minutes Book Club. Keep watching, keep growing. Today, we're going through the classic in the world of financial literature. A timeless masterpiece that transcends generations and serves as the North Star for those navigating the intricate realm of investing. Benjamin Graham's brilliant insights are a beacon of wisdom, guiding both novice enthusiasts and seasoned professionals alike through the ebbs and flows of the financial landscape. It's not merely a book, it's an enduring legacy, a testament to the enduring principles of value investing and the art of making informed, strategic decisions in the pursuit of lasting financial success. The Intelligent Investor by Benjamin Graham. The Intelligent Investor gives a deep insight into the psychology of financial markets, unveiling timeless principles of value investing. Benjamin Graham's The Intelligent Investor equips readers with tools to navigate market fluctuations, emphasizing a disciplined approach and the crucial concept of a margin of safety. Whether you're a novice or a seasoned investor, it's a concise guide to building enduring wealth in finance. Let's get started. Welcome to the captivating world of The Intelligent Investor by the legendary Benjamin Graham. Strap in, because you're about to embark on a journey that will forever change the way you perceive investing. This isn't just a book. It's a timeless guide, a beacon of financial wisdom that has withstood the test of markets and emerged as the cornerstone for savvy investors. You, armed with the insights of a financial sage, navigate the complex landscape of Wall Street like a seasoned pro. Benjamin Graham, often hailed as the father of value investing, is your guide, and The Intelligent Investor is your roadmap to financial success. Get ready for a thrilling ride through the highs and lows of the market, sprinkled with anecdotes, practical wisdom, and a touch of Graham's trademark wit. As you flip through the pages, you'll uncover the secrets of value investing, learn how to distinguish between investment and speculation, and discover the psychological nuances of market fluctuations. Graham's insights are not just theories. They are battle-tested strategies that have guided some of the greatest financial minds, including Warren Buffett. So, whether you're a seasoned investor looking to refine your strategy or a newcomer eager to unlock the mysteries of the market, The Intelligent Investor is your go-to manual. Get ready to be inspired, challenged, and equipped with the tools to navigate the financial world with confidence. So, fasten your seatbelt, dear reader, because the adventure begins now. Get ready to invest intelligently and thrive in the exciting world of wealth creation. If you like the content so far, please like, comment, share with your friend and colleague who needs it the most, and subscribe to the channel for such content in the future. Let's have a quick insight into the key content. Investment versus speculation, the investor and inflation, is century of stock market history, general portfolio policy. The defensive investor and common stocks, portfolio policy for the enterprising investor and common stocks, market fluctuations, investing in investment funds, the investor and his advisors, security analysis for the lay investor. Let's follow up with the key content in brief. Investment versus speculation. This chapter sets the foundation by defining investment and speculation. Graham distinguishes between the two approaches, emphasizing the need for investors to focus on the long-term intrinsic value of securities rather than short-term market fluctuations. He introduces the idea that an intelligent investor should be cautious and analytical rather than driven by market trends. Real-life example. During the dot-com bubble of the late 1990s, many investors speculated heavily in technology stocks, expecting continual rapid growth. However, when the bubble burst in the early 2000s, those who had invested based on speculation suffered significant losses. Contrastingly, investors like Warren Buffett, who focused on the intrinsic value of companies, weathered the storm more successfully. The investor and inflation. Graham discusses the impact of inflation on investments and purchasing power. Investors are guided to consider the long-term effects of inflation when making investment decisions. Graham suggests that intelligent investors choose investments that can protect against the eroding effects of inflation and provide real returns. Real-life example. In periods of high inflation, assets like real estate and precious metals have historically been considered hedges against inflation. Investors who recognized this and diversified their portfolios to include these assets protected their wealth better during inflationary periods. A century of stock market history. This chapter takes a historical perspective, exploring the trends and cycles of the stock market over the past century. By examining historical data, Graham encourages investors to develop a realistic view of market expectations and to learn from the successes and failures of the past. Real-life example. The Great Depression of 1929 saw a severe market downturn. Investors who panicked and sold their holdings incurred substantial losses. Conversely, those who adhered to a long-term investment approach and remained patient were eventually able to recover and benefit from the market's eventual rebound. General portfolio policy. The defensive investor. Graham introduces the concept of the defensive investor and outlines a conservative portfolio strategy. The emphasis is on diversification and using index funds to minimize risk. This chapter provides practical guidelines for constructing a portfolio that aligns with the defensive investor's goals. Real-life example. A defensive investor might construct a portfolio with a significant allocation to low-cost index funds. During market downturns like the 2008 financial crisis, this diversified approach would have helped cushion the impact, providing more stability compared to portfolios heavily concentrated in individual stocks. The defensive investor and common stocks. Building on the defensive investor's strategy, Graham discusses common stocks as part of a conservative portfolio. He introduces the idea of focusing on large, stable companies with a history of dividend payments. The chapter emphasizes the importance of stability and consistent income for the defensive investor. Real-life example. Defensive investors focusing on stable dividend-paying stocks might have found comfort in companies like Procter & Gamble or Johnson & Johnson. These companies maintained consistent dividend payments even during economic downturns, providing a reliable income stream. Portfolio policy for the enterprising investor. For the enterprising investor willing to take on more risk, Graham explores portfolio strategies that allow for individual stock selection and market timing. This chapter introduces the concept of active investing and provides guidelines for those willing to dedicate more time and effort to their investment decisions. Real-life example. An enterprising investor actively seeking undervalued stocks might look at the success of Warren Buffett. For instance, Buffett's investment in Coca-Cola in the 1980s, based on a thorough analysis of the company's intrinsic value, showcased the benefits of active stock selection. The enterprising investor and common stocks. This chapter provides specific guidelines for the enterprising investor when selecting individual common stocks. Graham discusses the importance of thorough analysis, a margin of safety, and the principles of value investing. The enterprising investor is encouraged to be more actively involved in the stock selection process. Real-life example. Benjamin Graham's investment in Geico, an insurance company, is a prime example. He identified the intrinsic value of the company, emphasized a margin of safety, and made a successful investment. This illustrates the principles of value investing for enterprising investors. Market fluctuations. Graham introduces the metaphor of Mr. Market to explain the unpredictable and emotional nature of the stock market. Investors are advised to view market fluctuations as opportunities rather than threats. This chapter emphasizes the importance of maintaining discipline and a focus on intrinsic value in the face of market volatility. Real-life example. During the financial crisis of 2008, the stock market experienced significant fluctuations. Investors like Warren Buffett, however, saw this as an opportunity to invest in fundamentally strong companies at lower valuations. Buffett's move during this period exemplifies the intelligent investor's approach to market fluctuations. Investing in investment funds. Graham discusses the advantages and disadvantages of investing in investment funds. This chapter provides insights into considerations such as fees, management quality, and investment strategy. Investors are guided to choose funds that align with their financial goals and risk tolerance. Real-life example. Exchange-traded funds, ETFs, have gained popularity as low-cost investment options. An investor looking to track the performance of a broad market index, such as the S&P 500, might choose an S&P 500 ETF. This aligns with the principles of low-cost investing discussed in the book, The Investor and His Advisors. Graham provides insights into selecting trustworthy advisors by addressing the relationship between investors and their advisors. The chapter underscores the importance of maintaining a level of skepticism, actively participating in the decision-making process, and ensuring that the advisor's interests align with the investor's goals. Real-life example. Investors choosing financial advisors often consider factors like track record, fees, and alignment of interests. Bernie Madoff's Ponzi scheme serves as a cautionary tale, highlighting the importance of due diligence in selecting advisors. Madoff's clients suffered significant losses due to the fraudulent nature of his investment scheme. Security analysis for the lay investor. Graham introduces the basics of security analysis for individual investors. He emphasizes the importance of evaluating the intrinsic value and applying a margin of safety in stock selection. This chapter provides practical insights into conducting fundamental analysis and making informed investment decisions. Real-life example. The success of value investors like Benjamin Graham's student, Warren Buffett, exemplifies the practical application of security analysis. Buffett's investments in companies like Coca-Cola and IBM were based on thorough fundamental analysis, emphasizing the intrinsic value of the businesses. As the intelligent investor concludes, Benjamin Graham imparts a timeless message that resonates through the corridors of financial wisdom. In these final pages, he leaves us with more than just a conclusion. It's a resounding call to embrace the enduring principles of intelligent investing. Graham's parting wisdom echoes through the annals of market history, urging investors to anchor themselves in fundamentals, practice discipline, and navigate the ever-changing financial landscape with insight. The conclusion isn't an endpoint, but a gateway to a perpetual journey where the principles of value investing remain unwavering guides. And that's a wrap for our The Intelligent Investor. Remember, you can apply these lessons while having a blast on your journey to greatness. If you enjoyed this, give us a thumbs up for more exciting adventures and learning. Thanks for being part of the fun today. I'm Mike from the 5 Minutes Book Club, and until our next creative expedition, keep embracing greatness and adding a touch of creativity to your life. Keep watching, keep growing. Like, leave a comment, share, and subscribe to 5 Minutes Book Club for more videos like this. If you want us to summarize any book of your choice, mention us. We strongly recommend reading the book to grab the knowledge entirely. The link is in the description.